Afternoon. Hope everybody's enjoying this heat. I want to warn you ahead of time. This is going to be a little shorter session here today as I gear up for our webinar this evening. But we have a great conversation today. Basically, a great question of the week is where we're going to focus from Iris, asking if gold is a good investment during these uncertain times. So very excited to kind of dig into that question. Thanks so much, Iris, for sending that on, and we'll be sure to get that answered. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday at 3 is to bring to you the market news, data, trends that we're watching, and hopefully weed out some of the noise along the way. So again, we've got a great question this week about gold as an investment. But before I get to that, I want to just kind of touch briefly on a couple of data points through the week. So one of them being retail sales. We had retail sales come out on Tuesday, and it was up 0.4% versus expectations of 0.8%. On top of that, some earnings challenges or concerns, I guess, or companies reporting of earnings showing some concerns. So this led to a little bit of a drop in the markets there on Tuesday. Things bounced back quite a bit yesterday with some debt ceiling conversations. But nonetheless, Tuesday was down quite a bit on really the first-ish concerns about possibly weaker consumer. And this is really important because at the end of the day, right now, to be honest with you, the consumer is what's really keeping things strong. Even with everything going on, we are still spending is the gist of it. And so that has really kept things going. Earnings have been strong. Companies have been reporting good, I shouldn't say good, better than expected sales and revenues and profits and all the above. And it's really all tied to the consumer. Now, if jobs start to drop further or there's more concerns about the labor market, as you might imagine, the consumer typically starts to slow down spending in that example. So it's something to really keep a close eye on. I wouldn't say this is a big scare right out of the gate, but is it cracks of the consumer weakening? We'll find out. Today, we also had initial jobless claims come out. I guess good tie into the jobs market. 242,000, so actually came down slightly from last week. I think the first time in a little while that number stopped growing, which is probably a good sign. And then we also had leading economic indicators come out. Basically dropped 0.6%, right in line with expectations. No surprise there, but a little smaller drop than last month. But know that as we have a month of a drop and then a second month of a lower drop, it's still a drop, right? So this could be signs of some slowing happening. This is to be expected, I think. I don't think that's a surprise. It's nothing to run from or run to, I guess. But nonetheless, certainly, maybe some signs that things could be slowing. All right, with all that, before we get to our great question of the week, I want to mention next week we have Fed Chair Powell is on a panel tomorrow, so that will be important to listen to. We also have Fed minutes next week, and then a lot of home sales data. So we're back focused on the Fed. Surprise, surprise. All right, all that to get here. So the question of the week is from Iris. Basically, the question is, if a recession may be coming, is this a good time to invest in gold? And I will preface all this by saying, of course, it depends on your situation and what is going on. But nonetheless, I'm going to answer this the more direct route and the best that I can with where we're at. So on top of that, there's some additional questions we'll dig into as well. But the first question is basically, with potentially a recession on the horizon, is it a good time to invest in gold? And what I will share is that in this environment, gold can typically be a great place to turn. Obviously, there's safety, and certainly when the dollar weakens, that can be a great place to look as well. And obviously, with inflation, gold can play a role or see some potential benefits of that environment as well. Now, the thing I want to really preface expand on with this is that gold in these scenarios, looking backwards, has been very strong with everything we're seeing right now, basically, right? Gold, this should be a great market for gold over the last year and a half or so. Now, we haven't really seen that, and I believe there's a reason why. As silly as this might sound, and I would not suggest this, as silly as this might sound, a lot of the people who would typically go to gold in this environment have been going to crypto investments to hedge against these concerns. So although all the factors are out there to say that this could be a great place and it makes sense to kind of look at gold as a hedge against some of these market challenges, we haven't seen gold prices do what they typically would in this scenario. And again, I think it's because a lot of that money is going to crypto instead, right? What drives up prices, of course, is supply and demand. And if the demand has gone from gold to crypto, even if it's not all of it, but some of it, obviously that can reduce the potential upside that we see in those price movements, right? Now, obviously, as far as a hedge, it could still be something worth considering, but nonetheless, it's important. And so what I would share is that the way we typically look at this is to look at gold not in a silo. We actually had gold in our portfolios a ways back, kind of before all the crypto craziness. It did really well for a little while there. Now, what we are kind of looking at more is more of a broader commodities exposure. So it may still have some gold in there, but to diversify a little bit away from that potential risk of, crypto overtaking or gold prices not performing the way that we might think, right? And so I think that's been really helpful. Gold obviously would be a part of the basket of commodities, but if we can expand on that a little bit, it reduces the potential for, some of these more supply and demand driven challenges that we're seeing in 2023, if that makes sense. Breaking this apart a little further, Iris also had some great questions about okay, so above and beyond that, right? We talked about gold, whether it's a good investment or not. Let's say we decide that you do want some gold exposure. Do we look at ETFs? Do we look at physical gold? What does that look like? And I think it really depends, again, on your situation and what you're really trying to accomplish, right? If you're looking at it as a way to experience some price appreciation, generally some sort of more liquid version of gold is going to be a great way to go, because I think this question is coming from the idea of using it right now as a hedge for a short term, not for long term. And if that's the case, an ETF can be a great way to go because you've got more liquidity, right? Let's say you get some price appreciation, you can sell off some of those gains. You could be a little more flexible with it. Whereas physical gold, if you want something to kind of put away for a very long time, something where maybe you're concerned about the dollar and what that might look like in the future, obviously that's where actual physical gold can come into play. But as and especially for somebody who may be either in or close to retirement, if your water bill is due, you can't just go kind of shave off a piece of that gold bar and pay the bills, right? Whereas with an ETF, for instance, you certainly could explore that. Now, there are different ways these ETFs can be structured. Be cautious of tax considerations depending on the fund or group of funds that you pick, because they can be structured very, very differently and can come with some tax consequences for sure, especially outside of a retirement account, right? So I think that's a good way to kind of look at the two, is liquidity versus, something that is maybe more long-term, more something that you would not need, I guess is maybe a best way to put that, right? But also think about fees, taxes, right? If you do need to sell physical gold, it's a little hard. Even if you're able to sell it, there can be fees, taxes, all those kind of things associated with that as well. Whereas an ETF or some sort of fund is typically not going to have the same type of challenges. So I hope that's helpful. Again, I would definitely suggest a broader perspective on this directly, but it doesn't mean that having some gold exposure may not be worthwhile. So hopefully that's helpful, again, especially in the economic environment that we're in today. Very great question. And thank you so much, Iris, for bringing it to the table. I hope you guys all have a great upcoming weekend. We'll see you next Thursday at 3.